Alrighty guys, welcome to this video. I've jam-packed everything here into a flowchart. We're going to talk about ICT macro scalping. This is my personal model and this is what I teach and I have taught on YouTube for free, but also to my Discord members. I'll leave a link to that in the description below. Now, this flowchart is going to take us from literally the beginning. What is macro scalping? How to understand the method. What am I using to execute from? How to enter, how to exit. Real examples that I've taken, other members in the Discord have also taken. And then after you watch this, what are the actionable steps that you can take to actually move this forward? So firstly, I want to talk about what is macro scalping and why did I start trading macros in the first place? Let me just kind of zoom in here so you guys can see, but ultimately, this is what macro scalping is. It relies on what's called a macro. So if you are a complete beginner, a macro, all it is, it's a window of time. It's a time window, and these exist 10 before and 10 after every single hour. For example, if you trade the New York AM session, 9:50 to 10:10, 10:50 to 11:10, 11:50 to 12:10, it occurs every hour. If you trade the London session, 1:50 to 2:10, 3:50 to 4:10, and this is just what you're looking for. It's a window of time, but you need to understand this. The macro is the window of time. The scalping is the fact that we're taking small trades. I'm not holding the trade for 3 hours. I'm holding the trade for maybe 15 minutes, 30 minutes. And that's exactly what I'm saying here. All scalping means, guys, is that we're in and we're out. And a lot of people ask me, well, why do you do this? Why not hold a trade? Why not, hold for the rest of the day? And I have done that. I have held for the whole session. And on the screen here, guys, I'll put a snippet of a trade that I held for the whole Asian session twice. So you can use macros to hold trades. But in this video in particular, I want to show you guys how you can scalp macros with high probability using such an easy framework. Just so you guys can see, right? These are some trades that are taken either from myself or from my members in the premium Discord. And this here is a window of time. That's a macro between these two lines. I've entered here, taken my profits there. Notice how quick the TP is. Entry, 1, 2 candles, 2 minutes, right? This person here from the premium Discord, if you're watching this great trade, here's the macro. You can see they've entered here, TP over here. Within 30, 40 minutes, you're out of the trade. Another person here, again, entered here, out of the trade here within 5-6 minutes. And these are the types of trades that we're going to talk about today. But that is what macro scalping is, guys. Macro scalping, it's not about holding trades forever. It's about taking what you need. And then once you take what you need, you call it a day, you move on, and the mental is much easier to manage at that point. A lot of people ask me, like, why do you take trades like this? Why is this your main model? Because based on my psychology and based on mentality, it's much easier to manage risk. It's much easier to hold onto profits. It's much easier to not go into tilt. When you're holding trades, there's more emotions, there's more time, and time equals money, time equals risk. So the less time I'm in the trade, the better it is for risk, in my opinion, and the quicker it is. Plus, you can go and enjoy your day as well. So once you've taken your trade like this, or you've taken your trade like this, or like this, you're done. 15, 20, 30 minutes, you can go out, spend time with family, play sports, spend time with friends, because that's what trading's about, in my opinion. Yes, financial freedom, but also it's about time. And if you're locking yourself up to the charts like a slave, and you're spending hours and hours and hours trying to hold a trade, and you're watching the charts every 5 minutes, you're not really free. And there's no real point in trading, in my opinion, if that's what's going to happen for you. So this is where the scalping model comes in. Now, number 2, we're going to talk about understanding the method. And before we even get into this in further detail, understanding the method, guys, is what I am personally doing. This is my personal entry model. So if you're curious and you've seen my YouTube videos, this is what I do. And you need to understand a few things. So if you're a complete beginner, I'm going to go through the basics for you guys as well. If you're an advanced trader, intermediate, this is still very important because these are the basic elements I need to actually implement this method, which is macro scalping. So going down here, there's no need for indicators. You don't need indicators. You don't need, volume profiles. You don't need to know this or that or standard deviations. You don't need to know that. All you need to understand are principles of time and a few elements of price. And we've already touched on the time element. Remember, ICT talks about time and he talks about price. Time in this case is the macro. They exist all day. Literally from the open, right? From 6:50 p.m. Asian session to 7:10 is the first macro. And the last macro is called the end of day macro, which is a good one to look into. And that's from 3:50 p.m. to 4:10 p.m. And everything here that I talk about is in New York time. Keep that in mind. So as we kind of go down here, what do we need to know? Well, firstly, we need to know a few things. One of those being an inversion fair value gap. And if you're not familiar with the term, I've got two examples here for you guys so you can see exactly what I'm talking about. Now, all I want you to point your attention to is to this candle structure here. This is a bearish example and this is a bullish example. And you need to understand this because this is how we're going to enter. So we've talked about time, but now this is how we're going to enter. Now looking at this candle structure here, just so I can mark it out, we've got 1, 2, 3 candles. And what you're looking for is the space between this candle's high and this candle's low. That is a fair value gap. We use that to move up, and when price closes below right here, that becomes our inversion fair value gap. So keep that in mind. It's a bullish fair value gap here because we're moving up, and then we close below, it gets inverted. And we want to use the inversion gaps, but why? Inverting this signifies that the market could reverse or retrace. And if we're looking for reversal trades, this is a perfect price signature that we want to actually look at in the market. So this here is the bearish example of an inverse fair value gap, and this here is the bullish example, right? So in this example here, we've got 1, 2, and 3 candles, and all I'm doing here is getting the top of this candle, the bottom of this candle, and that space, we use that initially to move lower, and we break above that with displacement. We have to break with displacement, then that's where we enter, right? So that's a bullish inverse, that's a bearish inverse, and this is going to be our entry model. So if you need to pause the video, but we've talked about so far, okay, what is the strategy? What's the macro scalping strategy? And we're using time and price. Time is the macro, the windows of time, 10 minutes before and 10 minutes after every single hour. Keep that in mind. Then we need to understand the method. And the method is we're using time, but we're also using price. And we'll talk about entries and exits further in this video, but we're using inverse fair value gaps to enter, and we're targeting what's called low resistance liquidity or trend line liquidity. And that's another important point that I need to discuss here, because you might be saying, well, what is it? What's low resistance? What's trend line? And I'm going to illustrate it on these two diagrams right here. So I want you guys to have a look at this segment of price here. And the easiest way I explain this to people is whenever you have accumulation, that is low resistance liquidity. Accumulation pockets, they're good targets. And I've talked about this for months and probably years on this YouTube channel, but you're looking to target these accumulation pockets. Another way to see it is trend line liquidity like this. Notice that? I can draw a trend line and price bounces, bounces, bounces. But why is this a good target, Ruben? Why should I target this? You can see how aggressively the market moves towards that. So you know that the market should be quick towards those points. But why is it the case? Because as price trades down like this, guys, people that are going short, they're going to move their stop losses above here, above here, above here, above here. The best way to see it is that there's money resting there. And where money rests, the market attacks. And that's exactly what we're seeing here. So low resistance liquidity can be equal highs, equal lows. It can be trend line liquidity, but an easy way to identify it is just look for accumulation pockets, and you probably have low resistance. Hopefully that makes sense. If you have any questions, post them below in this YouTube video. Now over here, if we have a look, the same thing applies here. I can draw a trend line like this. That's my trend line liquidity. I can also identify this accumulation pocket, and that is the low resistance liquidity. Now that's all we need to phrase a trade. We need a macro, we need low resistance liquidity, and we need an inverse fair value gap like I've shown you here, created with some displacement. Super easy, right? Super easy. And this is what I do every single day for my Discord. Every single day for my Discord and the premium members, I'm posting analysis for the London session, Asian session. And it applies to all sessions. So don't feel like if you trade the New York session that you're missing out, because I've also traded that too. That's where I started. And I've got plenty of knowledge I can share today with you guys for the AM session, New York, the PM session, the Asian session, the London session. And we're going to go through multiple examples today. Let's now talk about the entry and the exit strategies. Like, what are the logistics to entering and exiting the trade? Because if I'm going to go through a full model, how to macro scalp, this is an important element that I think people need to understand. So as we go through these modules, guys, as we go through these different segments, take notes, but more importantly, apply this to your own chart. if you want to get good at something, yes, watch this video, watch other people's videos, but you need to apply this to your own chart. If you don't, there's no success. You need to see it for yourself. And when you do, leave me a comment on this video and say, yep, I see it. Because trust me, if you don't already, this is going to completely change the game for you in terms of trading. It just simplifies it. Simplify the process, make your life easy. So again, we know we're going to enter from this. We're going to target this, which is low resistance. And what we're going to do, the stop loss, we're going to put the stop loss below the recent body of the swing low. Right? So we'll go through the same two examples, nothing crazy. Let's talk about it here. So we talked about the low resistance. Let's mark that out. There's the low resistance. We've talked about the inverse. That's going to be the entry. So I'm going to make the entry here maybe a green color. That's our entry. The stop loss in this case goes below the bodies of the swing low that's formed. Right there. And where do you target? That might be a question. Well, I would target at least a 1-to-1, right? At least a 1-to-1 to start. And then when you get more experience, go for a 1-to-1.5, or you can hold runners. And that's what I've personally done. That's what I teach. So a lot of people that I do one-on-one coaching with, these people that I coach, I tell them start off small like this. And then once you build more experience, then go for a 1-to-1.5 and then hold runners if you want to. But this is the scalping strategy, right? This is the base hit strategy, because once you've taken that hit, once you've taken this base hit, you're done. You don't have to be in the market anymore, like I said. And this is the benefit of scalping the market using ICT macros. And again, what we're looking for price to do, guys, somewhere around here, that should be a macro, right? The macro should be here. Now, if you're still here in this video, write this down. I allow 5 minutes on either side of the macro, because people ask me too, Ruben, they say, okay, I understand the macro is 10 before and 10 after, but what if the setup forms at, a little bit before, a little bit after? That's fine, right? That's fine. The market is not perfect, guys. And I'm sorry to break it to you. Yes, it could be algorithmic. I do believe that, but you cannot predict the market with 100% certainty. It's all about repeatable patterns. The longer you try to predict things, the longer you'll be unsuccessful for, because trading is about patterns, finding repeatable things, and then executing on that. This is a pattern. This is a repeatable thing I've seen. And this is a strategy I do every single day for the last year and a half. And it works, right? It works. Every single payout that I've gotten, every single payout with Apex, My Fund of Futures, Top Step, you'll see on the screen here, all these payouts over the last year and a half, these have come by using macros, inversion fair value gaps, and in majority, I reckon 85%, scalping. Scalping. Getting a base hit, calling it a day. Getting a base hit, calling it a day. So keep that in mind. Really, really important when we're talking about these things here. Now, in this bearish example, we can do the same thing. So we can mark out, if I just zoom out here, we can mark out the trend line liquidity. That's down here. We can mark out the inverse. So the entry, if I make that in green, the entry is right here. Where do you think the stop loss is going to go? Before I even mark it on the chart, we talked about the stop loss needing to be below the recent body of the swing low, or the recent body of the swing high. The recent body of the swing high. So I'm not putting it above the wick, and we'll talk about why in a second, because I want this to be a complete guide that you can actually bring forward in your trading. Why not above the wick, Ruben? Well, you don't need to. I'll ask you guys a question, right? Let's say you're in a trade and price comes all the way up here. Do you really think we're moving lower? Do you really think price is going to stop here and move lower? Is that really bearish? And I'm hoping the answer is no. So you're putting your stop loss in a place where it kind of invalidates your idea. And for me, if price comes all the way back up here, it invalidates my idea. What else would we be disrespecting? Here's the question. What else would we be disrespecting if price came all the way up here? We'd be disrespecting this bearish fair value gap. So if we came up here and we came all the way up, we're not respecting this bearish PD array. That's not bearish. And this is where stop loss placement and risk management are crucial, because a lot of people, they aim for too much and their stop loss is way too wide and unnecessarily wide, and they wonder why they're getting stopped out or stopped at break even. They're trying to target a 1 to 2 and they go, oh no, I could have taken this, could have taken that. And they're wondering why. It's because the stop loss is too wide. Stop loss placement is crucial. You need to give it a little bit of room, but you need to have a stop loss placed in a position where it invalidates the trade idea. So in this situation here again, if we were to mention it, The entry comes from here, which is fine. And the stop loss placement goes here. Where do you target? Again, 1-to-1 to start, 1 to 1.5 when you get experience. Target this low, call it a day, you're done. This is honestly as easy as it gets. As easy as it gets. And if you don't believe me, collect data. Have a look at all these examples. Go back in data collection software, or you can use FX Replay, create an email, create a free account, and then go from there. This is as easy as it gets, guys. And now what we're going to get into, if you've made it this far, are examples that are from the market from the last week, right? So this is being recorded on the 23rd. This could be posted in a few weeks' time, but it's all relevant. So this is good homework for you. And I think what we might do, because I know we've got people from across the globe, let's just start here. Let's just start with some trades using macros from Wednesday, the 19th of Feb. Using our entry model, using macro scalping, and using the New York AM session macros. I know it might be a little bit hard, but this is 950, that's 10.10, 10.50, 11.10. Now, what do we say? Let's go back. What do we say? We need to be in a macro. We need to have an inversion fair value gap, and we need to have low resistance liquidity to target. Those are our criteria. So write that down, jot that down, and now let's talk about this. Go into a bit of detail here. So if we have a look at this price action, you can see, and I'll mark all this stuff out too for you guys. Price comes down, and you might be wondering what this green box is. This is a 15-minute bullish fair value gap. So price comes down into this, and we sweep liquidity right here. Beautiful, right? So we sweep liquidity. Then we have our inversion fair value gap that's created, and that's the entry right there. Boom. The stop loss goes below this low, and we target low resistance liquidity. Easy. So if I was going to illustrate that with some lines again, what we did before, the entry comes here. The stop loss placement again goes below here, and the TP target low resistance, or go for a 1-to-1 and call it a day. You can even target up here, and that's it, and be done. Or you have to endure a pullback, and you still target that low resistance anyway. That's it. And that's a 950 to 10.10 macro. But wait, I didn't like that trade. I didn't like the setup. I wasn't confident. That's okay. Come back the next macro. Often if one macro doesn't give you a nice setup, the next one will. And you can see the same thing here, guys. We sweep this swing low, sweep that. We invert this gap. This is now the 10.50 to 11.10 macro. This is our target. And we have relative equal highs up here. This is our low resistance up here. This is also just a target. So when we're talking about entries, stop losses, entry from here, right? Stop loss in red or pink underneath these bodies. And then our TP in blue. Well, if we go for a 1-to-1, we're done before this swing high, but we can target this, or we can hold runners to this point. Doesn't really matter, right? So this is how easy it can be. And is it going to occur every day? Yes, it is going to occur every day in some sessions. But is it going to occur every day in every single session, every single macro? No. And that's the realism that a lot of people need to get up here, because macros, while they're great, you need to be watching price, and still you need to identify these things. Do not just hop into a trade just because it's a macro. You still need to have liquidity to target. You still need to have an inversion fair value gap. You still need to have everything else there that makes this a valid trade. So please don't go and watch this video and say, okay, cool, I'm going to jump into a trade just because it's a macro. Yep. Oh, I don't have any liquidity, but I'm just going to jump in. No. That's not how this video should be applied. Look for these key elements. Look for the time. Look for the inversion. Look for the low resistance. Happy days. Execute. Beautiful. Right? And that's just from the AM session. This next one here, for those that trade the London session, this is from the 20th of Feb. So have a look at that. And you can see here, exactly the same entry models. Like it's so simple, guys. So simple. Stop overcomplicating trading. Stop trying to use all these indicators in your charts, and simplify the process so you can repeat the process every single day. So what do we have here? We have this swing low. We sweep this sell side. When does that happen? During the macro. Now, what did I say before? You can use the macro framework and enter roughly about 5 before and 5 after, give or take. And the important point I want to mention is that you're looking for the framework to develop in or around the macro. So if the framework develops in or around the macro, you can enter a little bit later, and that's fine. Keep that in mind. Because the macro is doing the important thing, right? And in this situation here, same kind of situation, guys. We're going to enter from here, from this inversion. We're going to place our stop loss below the bodies. And where are we going to target? Where's our target? Where's the low resistance? We'll look up here. That's low resistance to target. But we can target a 1-to-1. Be done. And this is a trade I took myself, right? So if you look back over here, I took this exact trade. I'm not just saying these things and talking about it in hindsight. I took this trade. I entered here. I took my profits there. It was a small scalp, just over a 1-to-1, called it a day. And these are the trades that other people are catching in my Discord too. Some people learn from YouTube. Some people want to work one-on-one. Whatever method works for you, you do that. So if you want to learn for free, YouTube's here. I've got plenty of videos. If you want to do coaching one-on-one, I've got that too. So I've got so many opportunities for you guys to learn, both free and paid, that I think are really beneficial for learning. Now, let's say you don't take that first trade and you are unsure. Wait for the next macro. Okay. Here's your inversion gap. We have this massive bearish gap here. We close above it here. So that's your entry. Stop loss goes below the bodies. And where's the TP, Ruben? Where's the TP? 1-to-1, 1-to-1.5. Right, happy days. Pretty easy, right? This is the strategy. And the funny thing about this week is that this green box, in most of the examples today, it's the same 15-minute fair value gap that's been used as support. That's how easy it is. You use fair value gaps to act as support or resistance, and then you drop down to the 1-minute chart and execute using this framework. It's just as simple as that. People from across the world are using this model, are using this strategy in my Discord across the globe, right? Because it's so easy. It's so easy to implement. But this is just 2 sessions, right? We've got more. So this is if you trade the New York AM session, just so you can see how it looks like. This is if you trade the London session. This here is if you trade the PM session. And this is also a trade I took myself too, which I'll put on the screen as well. So it's not just limited to one session. It's not just limited to a kill zone. It's not something that is rigid in that sense. Macros occur all day, guys. And you have to pick the ones that suit your psychology, your trading style. And this is another example here from the PM session on the 18th of Feb. So if we have a look here, this is the important point. Notice how in this macro we come down and we sweep this sell side liquidity, right? Look at this. We sweep this sell side, just like that. This happens during the macro. The important thing happens during the macro, and we form the bearish gap that gets inverted after. So you might say, oh, wait a sec, this is not using a macro. Yes, it is. This entry right here is using a macro. It's using the fact that the macro has swept sell side and it's tapped into this 15-minute gap, the same one. And we're using the entry after the macro, using the macro sweep. There's so many ways you can use macros. Don't be so rigid that you say, oh no, it's 1 minute outside of the macro, I can't enter. Again, stop trying to aim for perfection. It's just a harsh truth. And aim for repeatable processes. So that's an entry there. Stop goes below these bodies. Target a 1-to-1. Target what you need. Happy days. And if you want to trade the end of day macro, same thing here. This is the next macro. You can see entry from this inversion, stop below the bodies, and let the end of day macro spool towards liquidity. So I want to be really clear on that. You know, everything we talked about today so far, and we've got more, it's not rigid in the sense that if it occurs 2 minutes outside of the macro, you can't enter. You're looking for the important thing to happen during that macro time frame, guys. That's really, really important. So if you have a look here, just say, for example, on this trade, my entry came outside of the macro, but the macro has swept liquidity. The same thing for this PM session example. The entry would come outside the macro, but the macro has swept liquidity. If you can enter everything in the macro, like say we sweep liquidity, we invert a gap all in the macro, great. But there's many, many ways to use a macro, and these are the ways that I like to use it. So in terms of the scalping, it's taking quick hits. In terms of using the macro, it's looking for the macro to do something important. Sweep liquidity, tap into a gap, invert a fair value gap, or all of them, all three, all four things, even better. And now looking at the Asian session, this is another example because people ask me this too. Being from Australia, for me, the London and Asian session are more accessible. But just so you can see, even if you don't trade this session, you can just see the same things repeating, guys. So this here is the first macro, which is 650 to 710. And you might say, well, wait a sec, this entry is before the macro, and it is. But you're looking for those important price signatures, right? So we invert this fair value gap with displacement. You enter here, your stop goes here, and you target somewhere up here. Where's the low resistance? That's all your trend line. That's also trend line, and you target that. If you don't like that, let's say, for example, you say, wait a sec, no, I don't like that. I want to enter in the macro. I want something a bit easier to understand. Then enter in the next macro. So this one here is from 750 to 810. And you can see we create a nice inversion gap here. We can enter like this, put our stop loss here, target a 1-to-1. See you later. Come back the next session, come back the next day, get on with your life and be happy with the fact that you spent little time on the charts and you've had a decent reward from it. So I hope this is all making sense. I hope all these things kind of put things in perspective. I think a lot of people are too rigid, get the same questions all the time. How do I use macros? This is how I use macros. How do I execute? This is how I execute. What am I targeting? This is what I'm targeting. What do I do in the Discord? This is what I do in the Discord. This is what we do, right? And I've been doing this for over a year and a half using macros. And trust me, I've tried every model. I've tried the 2022 model, the unicorn model, and they all work. Everything works. You don't even have to use an inversion if you don't want to, right? So say, we come into this chart here. See this down close candle? When we close above that, that's a change in the state of delivery. So you could use a macro change in the state of delivery if you wanted to. That's fine, right? If we go down to this example, you could let this candle be traded like an order block. So when we trade above that and invert, you could use an order block and an inversion fair value gap. In this example, right, you could also do the same thing. In this example, you could also do the same thing. Set it down close candles, we break above that, we form a change in the state. These green candles are also a breaker block. So for those that trade the unicorn model, when price trades back into it right here, that is your entry and we find support there. So just know, guys, you can use macros in other ways too. This is just my personal ICT macro scalping model. And now as we get to the end of the video, for those that have kept watching, I've got a special discount for you if you want to join the premium community, right? And let's start from here. If you want to join the premium community, I've got 3 things available, right? Number 1, I've got one-on-one coaching that I do with people and it's Zoom. So you can book as many calls as you want, right? I'll put all the links to that in the description of this video, but you're going to get 30% off. And the code for that will be in the description below. So keep that in mind. I've also got a course, and this goes through all macro-based concepts. These are all the chapters here, hours and hours of education, live executions, because I know some people want to actually educate themselves privately, and that's completely fine. Or I've also got the premium Discord where I'll talk through my 3 main models using macros. We go live on Zoom. You can ask me questions. It's a tight-knit community. So this is an option. And again, in the description of this video, 30% discount code, unlimited. Whoever wants to join, go for that. But if you say, hey, that's not for me, that's cool. Watch this playlist. 19 videos for free, right? And with that being said, guys, I hope you've got something from this video. I think the important part when we're talking about macros, scalping, whatever it might be in terms of strategy is keep the strategy simple, keep it repeatable, and you're going to see success. Stop worrying about trying to bottom tick or top tick a situation. Worry about finding repeatable patterns or processes and then executing from that. So for today, we've gone through what is macro scalping, what are macros, different trades I've taken, other people have taken, understanding the method, how to enter, where's the stop loss go, where's the TP go, real examples, different sessions, all sessions it works, right? And I'll tell you this, even outside of the kill zones, it also works. So if you're here saying, well, I can't trade the normal PM silver bullet or I can't trade the normal London silver bullet, that's okay. You're going to see macros work all day, every day, depending on the price structure, but you're looking for these key things and that will really weed out the bad trades and the bad setups. With that being said, guys, if you like this video, like the format, let me know. And if you want this flowchart, join the Discord. I'm going to post this in my Discord for free so you guys can access that. Send me a DM when you jump into the Discord and I'll add you to a special channel where I'm going to have this posted in there too. But with that being said, guys, been nice having you here and all the best for the week. Let's talk soon. Peace.